All right, so I hope you guys are doing well today. Thank you to Ryan. Of course, I think he's off the call now, but thank you to Ryan for the excellent presentation. So my name is Chad Hammonds, and I'm going to just sort of introduce myself real quick. So I've been working at Brown Edwards for about 7 years now, or I think September this year will be 7 years. Prior to working for Brown Edwards, I worked in banking for about 16 years. Started working back in 1996 for a bank, so I've experienced a lot of the, I guess, historical events that many of you have experienced as bankers. I started working in banking during the .com era. I went through 9/11 as a banker. I've experienced the mortgage crisis as a banker as well. So I've experienced a lot of the things that you guys have experienced as bankers and seen a lot of the changes over the years. Now at Brown Edwards, I specialize in compliance and BSA audits. And so I'm going to transition now to just talk a little bit about BSA, which of course is Bank Secrecy Act. We'll start out with just an overview of what BSA requires of financial institutions, and then we'll be doing a case study, just looking at a bank in Texas and some of the mistakes that they made regarding BSA, so that we can hopefully learn a little bit from the mistakes that they've made. So I will get us started, and then you'll hear a little bit later, you'll hear from Jennifer Timer, and she's going to tell you some best practices to sort of help you avoid some of the mistakes that this bank in Texas had made. So Jennifer, did you want to turn the control of the PowerPoint over to me, or do you want to just transition from slide to slide?
I think you have control, but Alexa, if you don't sense that you've got it, I'll be glad to do it. So
okay.
You feel like you, okay.
Sounds good, thank you.
Mm-hmm.
All right, so the question is, can we learn from another institution's $8 million civil money penalty? And I would say absolutely. History is really a wonderful teacher. It's always best, in my opinion at least, always best to learn from the mistakes of others anytime you can. I've always told my children, just learn from my mistakes. Let me tell you some things I did that were a mistake, and don't do these things, and of course they listen occasionally, but normally they don't. But yes, I feel like that we can definitely learn from the mistakes of others, and just looking at a case study here at what another bank has done and resulted in some penalties, I think we can learn from that for sure. So before let's see, I'm trying to transition here to the next slide, and I'm not sure it's working. So if I click on it, it's not transitioning.
It didn't work.
No, it didn't work.
Okay, then I'll do it for you.
Okay, I'm sorry. All right, so if we can go to the next slide. All right, so before we dive into the case study, let's talk a little bit about what BSA requires financial institutions to do. One of the things that they require is that banks provide for a system of internal controls to ensure ongoing compliance with BSA. And of course, these internal controls are described in the BSA policy and procedures. Typically, you'll have a BSA risk assessment, of course, and in that risk assessment, you describe what the risks are, the inherent risks, and then you've got your internal controls that mitigate those risks. And so those controls, of course, are further described in your BSA policy and procedures, and then in your processes. Another thing that BSA requires financial institutions to do is to provide for independent testing for compliance. And that can be conducted either by bank personnel or by an outside party. And of course, there are benefits to doing it, both ways. And BSA, it's similar to there are some other regulations that also allow testing to be done internally or through a third party. Safe Act is another one of those. But the benefit, of course, to doing it, in-house would be the expense. Of course, it's generally going to be a little bit less expensive if you're able to use your own internal auditor, for example, if you have an internal audit person or department. However, I think you lose something by doing that. You lose that third-party perspective. For example, we do approximately 40 or more BSA audits per year, and so if we perform a BSA audit for a bank, then we're bringing that expertise with us, and so we can sort of let you know what best practices might be out there, what other banks are doing that might be working effectively for them. And we also see other banks' exam findings, so we're able to sort of share with you. Of course, we never would share the client's name with another client, but we're able to sort of share with you what we're seeing in terms of exam findings and the direction things are going there. And I think also there's a lot less chance of independence being questioned if you have an outside party like a CPA firm come in and do your testing. Another requirement is that you have to designate an individual or individuals responsible for coordinating and monitoring the day-to-day compliance with a BSA. Now, this can look different depending on your institution. If you have a larger, perhaps more complex institution, it may be that you have a dedicated BSA officer with a full staff of BSA specialists. If you're maybe a little bit smaller institution, you may have just a BSA officer without the additional staff helping out. And then if you're perhaps even smaller institution, you may even have a situation where there's a dual role where you have maybe a compliance officer who's also the designated BSA officer. And the key is on that, and Jennifer's going to touch on this a little bit later, but you want to make sure you have the right resources based on your size, institution, and that sort of thing. And you also want to make sure that person who is your BSA officer, that they have proper authority. They need to be able to say, if they see that something's getting ready to happen that is going to violate BSA or cause a problem, they need to be able to say, stop. We can't do that. We need to stop. And they need to have the proper authority to be able to accomplish that. Another thing required is that BSA requires training for appropriate personnel. The training, it has to be periodic. I don't think it says annual in the BSA, but it's generally assumed that it would be annual, and your examiners are going to expect that the training be annual. And Jennifer's going to touch on that topic a little bit later as well when she discusses the best practices. All right, so next slide. All right, so the overall, one of the overall goals of BSA requirements is to identify and report suspicious transactions that are relevant to possible violations of law or regulation in the form of suspicious activity reports, which are filed with FinCEN. Financial institutions really play a critical role, as you guys know, in fighting crime and terrorism. I remember working in banking during 9/11. In fact, I remember, watching all that unfold, just the terrible images on a TV screen there in the lobby of the Bank of America that I was working at. And of course, after that, we had the Patriot Act came out, and I remember working with customers. Customers were quite upset a lot of times that you had to ask for documentation, you had to ask for their identification, you had to key in their driver's license numbers and things of that nature, the issue date, expiration date. You had to key all that into their to your computer system. And even customers that you had for years, customers that you knew very well, you had to key that information in, and they would oftentimes be offended, that you're asking them for identification. And then of course after that, you know, the CDD requirements and the beneficial ownership requirements came out, and so it's sort of an evolving thing. We're having to ask for more and more information from clients, but it's important. You know, it's something that helps protect our country, you know, from terrorism, for example. It's one of the reasons why our government and our regulators take BSA so seriously, and why the penalties for non-compliance are so high. So, you know, that's why there's, in this case study we're getting ready to look at, that's why there's an $8 million civil money penalty on this. Is you know, the consequence. I mean, it's just such an important regulation. And BSA has, of course, evolved over the years. You know, back in the 70s, it was more about looking at money going in and out of the country. And in the 80s, it was more about money laundering. And then after 9/11, of course, there was terrorism, this fight against terrorism. And of course, you're going to see it evolve even more so in the future as there's focus on other national security issues like cybercrime, you know, ransomware attacks and things of that nature. All right, so next slide, Jennifer. All right, so this sort of takes us to our case study. So let's look at this for a minute. So there's a consent order, number 2021-03. This is involving Community Bank of Texas. According to the consent order, the bank willfully failed to implement an AML program that adequately met the BSA requirements during the relevant time period. And the relevant time period was January 2015 through December 2019. So let's look at this. There's a key word here, and that key word is willfully. So if you look up in the dictionary what the word willfully means, there's a couple of definitions. One is with the intention of causing harm, and the other is with a stubborn and determined intention to do as one wants, regardless of the consequences. And I think that definition may be a little more in line with what we're talking about here. So, so the bank, this particular bank, they willfully, meaning they were, you know, stubborn and determined to do as they wanted, basically. So they willfully failed to implement an adequate AML program. And you have to also look at the period of time. We're talking about, you know, 5 years. So this is a fairly long period of time. So typically what you would see, you know, most banks, if they get a bad BSA exam, for example, and they have lots of findings, or they have findings that are, you know, rather severe, they will work, you know, diligently to make corrections. That's what you would typically see. So in this particular case, you know, we had an instance where they willfully did not do that over a period of 5 years. And so that's what you typically see when you see these large penalties, you know, in the millions of dollars. Is it's a situation most of the time where it's a willful violation and it's over a period of time like this. All right. Okay, next slide. Okay, so just a little bit of background on this bank, just to sort of give you some context. They incorporated in 2007. There were 35 branches in Texas. They're examined by the OCC, and I don't think we put it on the slide here, but their asset size is about $4 billion, or that was at the end of 2020. So they're a fairly large community bank, probably larger than many of the banks represented on this webinar, I would think. So my question is, excuse me, does this mean, you know, do you think this means that large penalties like this only apply to larger sized banks like this? And absolutely not. That is not true. You actually see financial institutions that are, you know, much smaller than this, even, you know, much smaller than $1 billion in assets, that will have multi-million-dollar civil money penalties for BSA violations. So, you know, don't think that just because this particular bank is, you know, is a larger community bank that your bank can't, you know, also have similar penalties if you know, if you had certain violations. All right, so this bank had 6 to 8 BSA staff, including a BSA officer and several BSA analysts. There were 3 analysts who reviewed case alerts on a regular basis and provided QC review for one another. So that's interesting. You know, nothing can go wrong there. So you've got basically people, friends, probably sitting next to each other in cubicles, you know, reviewing one another's work. So, you know, they go to lunch together. They've probably known each other for years, and they're reviewing one another's work. So, you know, I think you have to be careful with that. So let's go ahead to the next. I think we have a polling question coming up here next. Okay, so when you, excuse me. So when you heard the size of this bank relative to the size of the BSA staff, what did you think? Did you think the staff did not look large enough for the institution size? The institution looked overstaffed, or the staff looked about right?
Okay, I'm launching the first poll. Closing the poll now.
All right. So most of you said, or half of you, I guess, that said that the staff looked about right. All right. So next slide. All right, so let's look a little bit at how the bank system was designed. So they used an enterprise-wide automated AML monitoring system that reviewed transactions and generated alerts based on predetermined criteria, probably similar, you know, to what most of your banks do, you guys do. There were case alerts that were to be sent to the AML analyst to review the activity. And then the activity deemed to be suspicious was to be reviewed by a SAR committee. And of course, you know, you can have that set up to be reviewed by a SAR committee or an individual, just depending on what your BSA policies and procedures say. And then the SAR was to be filed if suspicious activity was deemed to occur. So this is how the bank system was designed. And let's talk about the BSA issues that we can identify here. All right, so the first issue was inadequate resources. So we had 3 analysts reviewing on average 100 alerts per day each. So, you know, I just sort of ran some numbers on that. Of course, as an accountant, I'm going to run some numbers on it. But so you've got 3 analysts, you've got 100 alerts each. That is 12.5 alerts per hour that each analyst is having to look at, which is and that's based on an 8-hour day. Okay. And so that's less than 5 minutes each. And so that's also assuming that this person is working nonstop. So they're not, you know, this is not factoring in a bathroom break or going to the lunchroom to grab a snack or talking to, you know, a coworker for a few minutes. This is just working diligently and, you know, less than 5 minutes for each alert. So, you know, reviewing supporting documentation, looking at activity, all of that had to be done extremely quickly. And so often the supporting documentation was not reviewed. I mean, there's just no way that they had time to review all the supporting documentation for all of those alerts in one day. And there were incorrect conclusions that were made. So, you know, obviously that would happen. And of course, remember, they also reviewed one another's work. So, you know, after they reviewed their 100 alerts, they also had to review each other's work. So there was an additional time required for that as well. So obviously there were inadequate resources to handle all of that. So let's go to the next screen. So customer due diligence. So how it was supposed to work at this bank, the bank risk scored customers based on a variety of risk factors, which were obtained through questionnaires. Excuse me. Frontline staff were to complete all CDD documentation at account opening, and also if the signature authority over an existing account changed. So there were certain points when they were required to obtain CDD information and documentation, you know, to do these questionnaires. And that was again at account opening, and if the signature authority over an existing account changed. All right, so that was what they were supposed to do. And all right, so what was actually happening was questionnaires were not often updated when circumstances warranted, and at times lacked critical information. AML staff were instructed to obtain additional information from the customer account officers rather than the customers directly. So just to kind of give you an example, it mentioned that, you know, the commercial relationship managers were often asked about activity on accounts, and of course they would come back and say, well, that's normal activity for this customer, you know. And so really they should have had, the BSA analyst should have had a little bit more professional skepticism. You know, in the audit world we say that we use the term trust but verify. You know, I believe what you're saying, but just give me all the proof. Show me, you know, prove to me. So, but they did, you know, if you think about it, they really didn't have time to have this professional skepticism. It kind of goes back to the resources. They didn't have enough time, didn't have enough resources to do that. So they oftentimes just sort of had shortcuts there, and they just went directly to the, rather than going to the customer to get information, they would go to the banker. Also, an accurate profile for customers was not always being obtained. For example, suspicious activity regarding international transactions was not detected. And another thing regarding CDD, let's see, they would open accounts. I'm sorry, that there was one instance where they opened an account for someone who had previously pled guilty to a tax crime, and they had there was actually public news stories out there connecting that person to a multi-billion-dollar sports gambling ring. So the employee opened the account and even left the CDD question regarding gambling unanswered. And then later opened accounts for affiliates of that customer who later turned out to be a gambling ring. So, you know, the best opportunity really to prevent those type of issues is really at the account opening process. If you can just prevent it right away without opening the account, that's the best way. All right, so I think we have another polling question here. So who follows up with missing CIP information at your institution? Is it branch personnel, operations, BSA staff, or a combination of all the above?
Launching the poll now. And Chad, we had a question come in. Once I close this, if I could read it to you.
Okay, sure. Hopefully I'll have an answer.
Closing now.
All right.
And I'll share that really quick.
All right. So combination of all the above. Okay. All right, go ahead with the question.
The question was, when does potential suspicious activity become normal customer activity?
When does potential suspicious activity become normal customer activity? I think it's just, I think what was happening is there were certain transactions happening on an account, you know, that looked suspicious to the BSA analyst, and then they would go to the commercial lender or whoever it was and ask about that activity, and they would say, oh yes, this is normal activity. You know, it looked suspicious to the analyst, you know, just looking at it, and then they would go try to get information from the commercial the employee in the commercial department, and they would say, no, this is just normal. It's just normal activity for this customer. So I think that was the issue, and they just sort of took their word for it, rather than maybe research that a little bit further to see if you know, is this really actually suspicious. I don't know if that, does that answer the question? I'm not sure. Jennifer, do you have anything to add on that?
The only thing, in case they were also thinking about whether or not, you know, when they're at their bank and they're looking at activity, and they're thinking, okay, at what point can we deem it, you know, typical customer activity? Unfortunately, I'm going to use the phrase that I don't particularly like, which is it just depends. I think you have to get a comfort level, like Chad mentioned, as the BSA expert at your institution. You know, really think about whether or not, just because it's standard for that customer, is it really trying to mask something that's something that isn't right? Money laundering, fraud, abuse of some sort, even going back to some of the crime that Ryan talked about a little bit earlier. So unfortunately, it depends. To me, I would go with my gut. You know, talk it over with maybe somebody else at the institution that that has experience with BSA, or of course, you can always reach out to potentially, you know, a BSA expert that's outside of your bank. So please let us know if Chad and I didn't tag team that. Okay.
Hey Jennifer, this is Jason. I'll add to that a little bit. And it probably, in situations like this, it probably relates to scenarios where once somebody independently dug into it, it was not normal business activity, and you should have been able to learn that. I know years ago there was a bank that had a check kiting. They had a customer that looked fairly suspicious of check kiting, and the BSA officer identified it. Did some legwork on it, and went all the way to the CEO, I believe, and the CEO said that, you know, that's just part of, you know, they own a car lot, and that's part of the business. They, you know, have a lot of checks coming in and out, and it makes sense. And as it turned out, you know, a couple of years later, they found out that wasn't the case. And if they would have sat down or drove by the car lot, they would have saw they had about 10 cars, and they would have had to sold every car in the car lot about 5 times each day for those checks to make sense. So, you know, that's a pretty extreme example, but I think that's kind of what he was going for there.
All right, sounds good. All right, let's go to the next slide here, Jennifer. Thank you. All right, so the next issue was initial illicit activity was undetected. So they had an automated system, automated AML monitoring system, that did not detect initial activity, initial meaning the first 90 days. It did not detect initial activity that was illicit. The system calculated the difference between expected activity volume compared to actual, but at times it failed to enable the bank to fully understand the nature and legitimacy of its customers' activity and patterns. And of course, this is, you know, Jennifer was probably going to speak on this a little bit later, but related to the AML monitoring. So I'm going to kind of let her speak on that without going further into that. But basically, the AML system, monitoring system they were using, there were some issues with it. So next slide. Next issue was the staff did not use the available resources. So the AML monitoring system had the functionality to generate monthly work list items, such as a high-risk report. The report could provide information about account activity for high-risk customers, but despite that ability, AML staff did not generate such reports during the ordinary course of business. So, you know, that of course goes back to resources, you know, that would have been even more work. So, you know, they didn't, obviously, you know, based on what we looked at earlier, as far as, you know, less than 5 minutes a piece to work the alerts, and they didn't have time to pull additional reports and work those. So, all right, and the next slide. All right, so that slide looks like we're zoomed way in. I'm not sure if that's just my view or not. Can't tell.
It looks fine on my end.
Does it? Okay, I think it must be my computer. Okay, so the next issue was the handling of alerts. The BSA officer exempted customers with activity that was thought to be well known, but later some of these customers were later arrested or convicted of financial crimes. So in other words, they would say, okay, we know this customer, so we're just going to ignore this alert. You know, this is an existing customer that we know them well. We're going to ignore this alert. And in 2019, the bank's adjustments eliminated approximately 1,000 case alerts that would have been generated. Analysts would close an alert on an existing customer in which SARs were filed without documentation and without recognizing potentially new suspicious activity. So this is a good one here to be aware of. So in other words, a SAR was filed, and then of course, as you know, you've got 120 days to file a continuing SAR, you know, 120 days from the prior SAR, if that, you know, suspicious activity continues. So what would happen is they would have that situation where a SAR was filed, and then an alert would pop up, let's say a week later, on that same customer. And rather than look into that suspicious activity and potentially go ahead and file another SAR, they would just say, oh, we're not due for another, we don't have to file another, you know, a continuing SAR until 120 days out. So we're just going to ignore that. So they basically would go for that, you know, 90 to 100 day period of time, just ignoring the alerts on those customers. So, all right, so next slide. So the results of all of this, they identified 17 SARs that should have been filed. Of course, there was a consent order issued. There was $1 million fine from the OCC and an $8 million fine from FinCEN. I think those netted out. I think they ended up with the FinCEN fine. I think they credited them the $1 million from OCC. So I think the total fine was $8 million. Correct me if I'm wrong on that, Jason, but I think that's right. And then there was BSA staff that resigned or retired as well. So, you know, there were basically financial consequences, you know, huge fines and losses involved, loss of staff involved. And if you think about it, you know, the reputation issue here, you know, this is public information. I mean, here we are, we're talking about this, you know, and this is out there on the internet. I mean, this is not something that's hidden. And if you know, if you're looking at banking with a certain bank and you're looking them up on the internet, you know, you're gonna, if you look this bank up, you Google it, you know, it's gonna pop up, it's gonna be there. And also, if you think about, you know, the relationship with their examiners going forward and with the regulators, you know, wouldn't you say that if you had this type of thing where you have, you know, back to that word, you know, willful violations like this, you know, wouldn't you think that that would affect your relationship with your regulators and examiners going forward? You know, there's going to be sort of a loss of trust there, probably unlikely to cut you a lot of slack from that point on. So large consequences. So, all right, so I'm going to transition this over and let Jennifer talk to you for a few minutes about potential penalties for BSA violations, as well as just some best practices.
Well, thanks, Chad. I'm Jennifer Timer, and I'm a director here at Brown Edwards. And like Chad, I have been fortunate enough to work in not only public accounting, but also work for a community bank for over 10 years. So Chad and I kind of tag team the compliance and BSA areas of the Brown Edwards practice. And so appreciate you all being with us this morning. If you have any questions, just let us know. As Chad spoke about, we wanted to just share some, these numbers kind of pop out at you of how much you can see in fines and penalties from an individual violation basis, and then how much, if the regulators believe that it's a pattern, the numbers are going to grow. And something to pay attention down is the last paragraph is even on an individual basis. If the regulators believe that individually, is that you or someone at your institution has willfully violated these BSA regulations, they can be charged and unfortunately also go to prison. So this is not light stuff. And I want to take an opportunity for those of you who work in your BSA departments. What you do is so important. Sometimes it's not necessarily treated as if you're nothing but maybe some overhead costs for your institution. But please, if you're ever doubted or ever feel like you're doubted, you can always pull out this penalty dollar amounts and show your institution, your board of directors, how much money you help them save by not enduring some of these penalties. So what you do is very important at your institution. So how can we learn from all of this? Chad painted the picture of what happened at this bank. None of us want to see a fellow institution suffer, but we can learn from it, just like Chad mentioned a little bit earlier. So we wanted to share just some best practices with you this morning. Staff and training are probably one of the most important things you can do. Make sure that you have the right number of people and the right people doing your BSA program at your institution. Please be careful that you don't say, well, we've got 1 or 2 people available, we're going to do the best that we can. Regulators don't want you to look at it that way. They expect you to have the resources you need to match the risk profile you have at your BSA in your BSA program at your bank. So I encourage you to really think about the resources that you have and whether or not you need to change them, meaning either change who's involved or add to your BSA department if needed. And also training, and something that we've shared with you before and in some of our webinars is it's not just about just getting some training. The training should be specific to the job category that your folks have. Lenders probably need a little bit different training than maybe some of your frontline staff, just so they recognize issues on the lending side. So be very thoughtful there. Your interns, people who work part-time, be very thoughtful about those who might be involved with your customers or customer transactions, because they should have BSA training too, and the regulators are going to look for that. So make sure you have those records, make sure you have the customized training, and for your BSA department specifically, make sure they have really strong training every year to help them keep up to date. The AML system that you have, many of you probably have an automated system. That system is intended to help you focus your efforts on investigating potentially suspicious activity. It's intended to help take away the guesswork of putting all those reports together, and you decide whether or not is this suspicious, is this activity we need to investigate further. So it's intended to be able to use the resources that you have as efficiently as possible, but you just need to make sure that it's working the right way. You want to make sure that the system is truly capturing potentially suspicious activity, and that it's catering to the risk profile you have for your bank. So that's why it's not standard across the board for everybody who uses a system like Yellowhammer or BAM. You still need to cater it for your institution. It's a good practice to have those reviewed at least annually. I would also encourage you to do it if you have a significant change at your bank. Or also, if the system itself goes through a major change, take a look at those thresholds, take a look at what's been disabled, something that isn't turned on. Those are real quick ways to take a look at something that might need to change in order for you to get the alerts that you need in order to know whether or not to investigate something further. If you decide to make a change to a threshold or a parameter, or especially if you decide to turn something off, you're not going to use it, I'd caution you there, but sometimes it makes sense to do that. So just document it. Again, take a fresh look at it at least every year, and ideally you've got 2 people doing that that have experience. And the reason we say 2 is normally 2 minds are better than 1, but you're just trying to be critical and thoughtful when you're taking a look at those. We also believe that, go ahead and ask that third-party provider to take a look at your system every so often, maybe every 2 or 3 years. Have them help you based on the experience they have with their other clients about what might need to be tweaked as you're on your parameters and thresholds. It's just another way to make sure that the system that you've paid for is working the way that your management team and board is expecting it to. When it comes to just alerts, Chad mentioned earlier, the Community Bank of Texas had a tremendous amount of alerts to look at every single day. And you probably feel that way to some extent yourself, especially when you first turn on your AML system. So what you want obviously is alerts that are truly helping you focus on potentially suspicious activity. Just because you have a high volume of alerts doesn't mean your AML system is not working. It could be that you truly have that much activity that needs to be investigated. So make sure the staff that you're using are equipped to make good, educated decisions on that. I know it sounds trivial, but please make sure that they understand what they're doing. I imagine all of us this morning have met someone somewhere who does a job somewhere, and they don't necessarily understand why they're doing it. Well, that's not what you want in your BSA department. It's just too critical. So, make sure they understand that they can't just go ahead and clear an alert just because that customer has shown up before and you've filed a SAR or you've deemed that previous activity is not suspicious. Just still take a fresh look and make sure that the new alerts are not actually trying to tell you that there's actually new activity that needs to be investigated further. And when it comes to clearing alerts that you don't need to investigate further or whether or not to file a SAR, please be sure that the group or the person who's making that decision is understanding BSA, understands the situations, looking at good information, and that they feel like they can make that decision. Chad spoke to that earlier. You need to be careful if you have other people at the bank who can shut down that BSA officer's gut feeling that a SAR needs to really be filed. Also with alert management, we believe that, if you have deemed activity before for that customer to be okay, it was a great question earlier. We ask you to just take a fresh look at that every so often and make sure, is this really okay? Of course, you've got to be thoughtful about how you use your time during the day. But if you make a point of taking another look, a fresh look at information and activity that you have deemed to be acceptable, if you take another critical look and make sure that it truly is, it just helps support your BSA program. You also want to promptly address alerts. They're intended to be addressed pretty quickly, ideally every day. If you can't, again, you want to ask your senior management team potentially for additional resources, but talk to them if you can't get to those alerts and try to figure out why. It's very possible your AML system just needs to be tweaked a little bit, but just be open to all avenues about what you need to do in order to address those alerts. The goal was to try to identify that activity as quickly as possible. And of course, retain documentation about those decisions that you're making. How are you making that decision? High-risk customers, obviously you want to identify those as quickly as possible. What kind of activity do they have? Does that activity make sense? How are you monitoring it appropriately and often enough. So make sure you're catching that high risk activity as quickly as possible, ideally at account opening. If not, catch it as soon as you see it, as soon as you see it visually, as soon as your frontline staff see it, or your AML system. So the last bullet point here is talking about the ability to override a risk rating. You know, a lot of your systems allow you to do that, and sometimes it makes sense to do that. You know, either there's too low of a risk rating being generated by your system, but you know that you need to watch that customer more closely, and you get to override the risk rating to a higher level, or vice versa. You know, the system keeps identifying something as high risk, but you've taken a look at it and you believe that it's not, and you are able to downgrade it. So there's nothing wrong with doing that. What we would encourage you to do, though, is at least quarterly take another look at those risk ratings that have been overridden and make sure you still feel comfortable that that's really the appropriate risk rating to have on that account. Just a couple of other things. When you do use that automated system, it's still possible that you need to supplement the information you're gathering there with other information, either from the core. If you have a system where your monetary instrument, your cashier's checks logs are not coming over very well, make sure you're identifying those potential weaknesses and just compensate for it. It doesn't mean that you scrap the AML system and go all the way back to manual, but just recognize what those are and just adjust your staff to that. For new customers, consider doing a Google search just to see if there's anything popping up that makes you believe that maybe you shouldn't open up that account, or at least monitor it as a high-risk customer for a while. And we also encourage you to do a Bsa model validation every 2 or 3 years, or anytime there's a major change at your bank or there's a major change with the actual system itself. A model validation is going to do a few things for you. It's going to take a look at the parameters and thresholds that you are using, what you have set for those parameters and thresholds, and also, have you turned anything off? You've disabled some parameters that you could be using in your system. It should look at data flow from all of the different avenues of transactions, whether it's from the core, it's from ACH, it's from official checks, debit cards. Is that all flowing from your customer system all the way into your AML system? Another thing you're going to want to see is that all of the transaction types and codes that you use on a customer's account is actually flowing through and has been mapped correctly in your AML system. Those transaction codes are one of the main reasons that you have data that hit those alerts that you rely on. Some systems call them agents, some of your systems call them parameters and thresholds. You just want to make sure that the transaction codes that can hit your customers' accounts are flowing correctly into your AML system. And those are the types of things that we look for when we do model validations for our clients. So we wanted to open it up for any questions, but we also have a polling question to wrap it up here, right here at the end. So this question is, how often are the parameters and thresholds that generate alerts in your AML system reviewed for possible change? Number 1 is we haven't changed them since we started. Number 2 is every couple of years, the institution doesn't change too much. 3, at least every year. 4, every quarter.
Okay, launching the last poll now. Closing the poll. Jennifer, so 50% was the winner for at least every year.
Oh, great. Well, that is good news, everybody. So, just document that review. You want to probably make sure senior management's aware that, your BSA department has reviewed those. and very possibly just a snippet to your board of directors if you have a committee that kind of watches over your BSA program. Just let them know that you reviewed them. Again, be very thoughtful when you disable certain features in your AML system. So if you need anything, you just let me and Chad know. We'll be glad to help you.
And I had one question come in, Jennifer, to wrap things up. Could you elaborate on why another SAR would need to be filed on a customer shortly after an initial SAR, simply because an alert may be generated on continued activity instead of just including that information in the 90-day filing?
Okay, thank you. I probably wasn't clear. This is referring to a new alert is generated, but it's actually trying to tell you that there's new activity. There's a different type of activity that needs to be reported in a SAR. So this is not intended for, hey, it just keeps telling you it's the same type of activity. So yes, you would just do the continual SAR, like you mentioned. This is about just assuming that just because you get an alert on the same customer, that it looks like it's the same activity. So Chad, did I say it correctly? Jason?
Yeah, I think so. I think that the issue with the case study we were looking at is they were getting that alert and just assuming, hey, I don't have to file a continuing SAR yet, so I'm just going to kind of push it aside without really thoroughly reviewing it to see if it is in fact some different type of suspicious activity.
Please let us know if we didn't answer your question completely.
Okay. Any other questions out there, Alexa?
That's it. And they said that helps. So great job.
Good.
Okay.
All right. Thank you.
Very good. Well, I just want to thank everybody for being with us today, and all of you that presented did a great job. Proud of you and appreciate that. You know, in this last session, as we looked at what happened to this bank and the penalties and so forth, I had to think about how, you know, one of the signs of us maturing as individuals is learning from our mistakes, and that's really important. It's also really, really good to be able to learn from other people's mistakes, and that's honestly a little less painful. So hopefully we can do that here.